Okay, good afternoon, ladies and gentlemen. This is Clueless Day Trading Frank. Very, very important market tactical update webinar for Clueless Day Trading members and free trial subscribers, and anyone else who chooses to listen to this recording, which will be uploaded to the Clueless Day Trading YouTube channel for mass viewing. Hopefully it gets to about 10 million people, so they understand what the heck's going on with the financial markets and why things do what they do. I don't have all the answers, but I certainly have a few more answers than most people out there. Full disclosure, this is purely for financial education and not for any solicitation or advice. Like I always, strict discipline. You manage your own trades. I provide the alerts, the tactical tools, all the tools that you need to build your house, and you have to go in there and build your own. That's capitalism. Okay, so let's kick off by showing some real simple charts. And again, this is not a chart analysis webinar. This is just to sort of get people to understand why markets do what they do. I'm constantly learning, even after all these years, and I haven't been around for 30 years trading the market either. But I've certainly seen swings and cycles in the market which have taught me to respect that when things change, you have to respect it. Markets are not doing our bidding. They're doing what they need to do. And when the big money starts flowing in, as it has been lately, it just seems unbelievable. And so you just have to adapt. Because a couple of things I talked about in one of my ACS sessions about 2 weeks ago are three key words. Adaptability, which is critical. Adapt or perish. That's it. Okay? Adapt to the circumstances. Flexibility, as in changing direction. Cannot stay dogmatically stubborn, going against the grain, and then getting whopped around, which I did a little bit on the SPX puts and such. But you got to be flexible. You switch sides. Then you have to have the guts to understand the basic, the tactical nature of the market. I should say the knowledge, not the guts, the knowledge of the tactical view that's out there, and not keep on questioning it and making it do your own bidding, because it'll never do it. Trust me, I know. Trust me, I know. Okay? And then finally, you have to apply your own guts and whatever capital that you're trading with or such to get in there and make up any losses, which could have been made up today in one swipe alone, and then further profits, because the game is not to just be even, the game is to be ahead, right? So that's it. There's multiple opportunities out there. Okay, both and there are stocks which are well off the 52-week highs. Great companies, and I'm not going to go through each one of them tonight, because then it's going to be like a 9-hour session. But if you just simply look at the selected trade alerts and stuff that I put in there, and believe me, there are so many out there too, so many that you guys know yourself. But the selected trades that I put out there, and it's not humanly possible for me to put out many others that are on my screen, but I'm putting out these selected ones. Even those alone can give you a bang for the buck, and the moves I've just started on some of them. Okay, so the market. So before I get into this, let me just point out one thing. This is a real stock market. So what's happening for the last couple of months or so, we have seen massive sector rotations between biotechs, between technology, between semiconductors, you name it. And what's happening is one sector's down 30%, the other one's going nuts. A couple of months ago, it was all about the utilities and the dividend-paying stock, the boring, absolutely the grandpa stocks making 52-week highs. Value fund managers were losing their head, like, oh my God, we're finally getting paid. And then as rates started to move up, obviously you had, as rates started to move up, you had pressure on those dividend-paying REITs, paying stocks and utilities and stuff like that. So the money rotated into growth stocks. Then the money rotated into, and these are happening within very quick time frames. Even though today was a really broad-based rally, today was one of those days when everything rallied. Utilities rallied, technology rallied, biotechs were the only red on the screen. Okay. So what's happening is when these sector rotations happen, they happen very, very quickly. In the old days, you could detect them, maybe a couple of, weeks ahead or so, or even a couple of months ahead. Nowadays, you have to detect them within a couple of hours. Look what happened after the November elections. I'm always proactive, notifying everyone. I said, listen, get into those materials, stocks like U.S. Steel, stocks that I don't normally trade. Stocks like Caterpillar, stocks like CLF, stocks like AKS Steel. I said, just get in there. And banks, the Bank of Americas, the Goldman Sachs, I don't like spreading the net too far, even though there were a whole bunch of regional banks which went berserk. But like you say, you don't need like 30 different things. You just need 2 or 3 that are the fastest movers. Bank of America was monstrous on the lotto calls as well as an individual common. But when that sector rotation happened, it happened instantaneously. There was no prior warning or signal. So I should get into it. Bang, they're still going. So what I'm getting at is because of the advent, and I know it sounds kind of monotonous and keep on saying that, but I don't think people still really quite understand the power of the machines. But when these algo HFT black boxes run by high-level institutions, smaller institutions, algo shops, they call them, hedge funds, which are purely mathematically driven, statistical, what do you call, they look for statistical arbitrage and all kinds of stuff. They're instantaneous. It's beyond the nanosecond. It's just bang, they're in. They were saying that today there was when the market jumped about 100, from 77 to 124, 50 points. There was a huge block of 50,000 SPOOs or SPX calls and E-minis that were bought instantaneously by whoever it is. That's a $5 billion trade. That's a $5 billion trade. Now, 2 reasons that could have happened. They were short, and finally they said, that's it. They're getting blown up, and then they went and covered. Or it could be a new buyer who came in and said, you know what? I'm going to ride this wave because the wave is going higher. So what I'm going to show today in simple terms, and these are the simple charts first, is what's going on on a broader perspective, because many of you don't quite, and it's not your fault. You have fantastic careers and day jobs and stuff, so you're not supposed to sit there and study market history. So this is from 2014, okay? So this is from 2014. And what we are seeing here, so here's 2014, okay? So here's 2014, January. This was 2015, right there, January 2015. And then this was January of 2016, which was a wham, bang, double barrel bottom dragon bullish formation, whatever you call it. In fact, it was a mini double bullish formation within a very large one. That was the previous low was in September. It was the taper tantrum that the Fed was going to, people forget, but the Fed stopped QE, okay, back in October of 2016. So the market basically all nervous. Then it came down, tested that 15,000 level, 15,250, and realized the world didn't end because the Fed ended QE, quantitative easing. And you could get the bears out of the cages. They'd be like going nuts. Like all I could hear on every single forum, that's it, QE's over, we're going to collapse and burn. It was just like, relax. Okay, just chill, because it didn't happen. Like they say, sell the rumor and buy the news, right? Or buy the rumor and sell the news. So once it happened, the market started to bounce. Then it created a mini higher double bottom, and then did that. Did the same thing again in January and February. We could possibly do this again in this January, obviously from different levels. And then this happened. Here's your Brexit. Okay, here's your Brexit in June, right there. Here's your Trexit, like I called it, the Trump exit, which was really a 1,000-point drop on the Dow Jones Industrial Average, honestly speaking. But it would have been a 1,000-point sort of, Dow futures drop. It was 800 points or so if they hadn't, if the limiter they didn't put the halt in. The limit triggers went in after hours, and so we were down here, and somewhere down here, and look where we are now. So let me get straight to this here. There's something big going on, and this is not a joke. It's huge. Okay, huge. Sound like Trump here. Huge. So the bottom line is that what's happening is a significant. Many of you know this. Okay, many of you know this, that that the big money. There's a couple of places where the money's coming from. Okay. So the first place where the money's coming from is directly, which is the asset allocators. These are the big mutual funds, which are the 800-pound gorilla in the market. Hedge funds are it's actually a very small percentage of the big money. The big monies are the pension funds, the TIA, CREFs, the CalPERS, California Teachers Pension Fund, stuff like that. And then you have the mutual fund complex, which is not 800, it's a 900-pound gorilla. Then you have the hedge funds and the ETF complex and such. So those asset allocators are coming out of fixed income bonds, which are the safe havens in general. But when rates are rising, bond prices are dropping. Simple stuff, right? So they have to come out of that, and they're moving into risk assets, different sectors. Just because markets are high doesn't mean they're buying into every sector. They're just picking and choosing and getting. They're not always right, but they're getting in there. They're taking positions. So that's one huge factor of the market. The other part is that mutual funds, mom and pop, right, is they were so traumatized and stupefied, and I can't even say the names. They're frozen. They didn't even look at the stock market. Believe it or not, now they're starting to look at the stock market. Okay, now they're calling up their mutual funds guys and saying, hey, those money market funds, I got 10,000, 20,000, 50,000 lying there. Hey, what kind of fund should I get into? Should I get into the growth fund? Should I get into the tech fund? Looks like Amazon's really waking up. Let's buy Amazon. And stuff like that. So basically they can buy individual stocks. In the mutual fund, they go into a basket, which would be a growth fund and such. So that movement from $6 trillion or so, which is an unheard of number. In fact, if some of you who are astute followers or not even astute followers, have just read some of my or quickly scanned all these powerful little pieces that I tweet out on my articles that I tweet out, headlines, And remember, you don't need to read the whole article, okay? You can if you want to, but just read the headline. Read the first couple of lines. Read the little comment that I make on the top. So those $6 trillion or so of money that was sitting there, they are now starting to enter the market. Guys, I don't have an exact mathematical number, neither will I attempt to go there, but $6 trillion, if $3 trillion come into the market, you're going to be at 21,000 Dow in a flash. Now, just like anything else, markets rise. Markets are a discounting mechanism. What might happen in the future? You might have heard that. I didn't make that up. That's what it is. Markets are a discounting mechanism. The thing with markets nowadays are that they discount things within hours, if not by or within days. These type of drops. This is S&P 500. I showed this that we're going to have a rising wedge breakout. That's exactly what happened. Okay, and this is going higher. Yes, it can pull back a little bit, create a small red candle like this, as long as the body of the candle, I repeat, simple technical analysis, is trapped within the body of the bullish engulfing, then you're fine. If the body of the candle is larger than this, let's say, for example, very large, then obviously there's a reversal pattern, setting up. So we'll see. We'll see. These are weekly charts. These are cutting out a lot of the noise of the daily and the hourly that us monkeys on hot tin roofs, right? MOHTR, that's what I call it, right? We deal with. We all are. Let's face facts. Some of us are less than others. Not all of us just buy something. Okay, I'm going to revisit Amazon 2 weeks from now, and say hi to Bezos. No, we watch it like a hawk. Technicals and such. Sometimes it's actually better to just take a position and maybe not look at it. Very hard to do. Very hard to do. Primarily because of volatility in the markets. But then if you're buying swing calls and stuff, honestly, you shouldn't tamper around with it and every 5 minutes. Oh, it's going to hit 760. Oh, it's going to hit 762. Who the heck cares? Because if the pattern is on the way up, as I've shown on the charts repeatedly, okay, I'm picking Amazon as an example, then you stick with it. Yes, there's going to be like down 5, down 6 intraday. They'll be up 6, and then some big hedge funds, some hedge funds are going to go big. Even little hedge funds are going to take profit. It's going to come down $4. It really doesn't matter as such. So you got to manage your own type of option scenario. Manage the premium, the time factor, and all that stuff. I'm not going to get into that. Okay, because that's like way too much work for me. For $60-80 a month that you guys pay me, I'm not going to, I just can't do that. It's not possible, and I wouldn't do that either, because that's going into your personal affairs, and legally, I'm just not going to go there. But I'll give you hints on, like, okay, buy 2 weeks out or a week out. Okay, event driven, so maybe you buy this Friday, stuff like that. And you guys all know that. I do my best in guiding people as much as possible. So saying all that, if you look at it, if we get a large bearish, but I'm showing you the bearish picture here quickly. Let's say this is a red candle, okay? So pen color, can we pick red? Let's see if it gives me red. Yes, it gave me a red. Beautiful. So let's say it's a bearish engulfing like that. You don't need me to tell you that the sellers are coming in. That doesn't mean it's the end of the world. It's probably just coming in to retest this consolidation channel that lasted from, believe it or not, from August all the way through October. In between, that's a large weekly consolidation channel. And a consolidation channel, you have a big fall, you get a couple of weeks up. Remember, every candle is a week, 1 week. Then you get 1, 2, 3, 1, 2, 3, 4 down weeks with a little, little attempt at a recovery which failed. So again, it's not the end of the world. Then you come down, you test this, and if the market does want to go higher, it's going to bounce from here. Or it can come down and test, again, the 2080 level, create a massive dragon bullish, and go higher. Now, I've been showing these for a while now, and again, you have to basically, look at my charts and all the things. Take a couple of ACS sessions to really understand the dynamics of it. I'm just giving you the basics of it, and say, okay, that's a pattern. We don't know when a candle is developing like that, whether or not we're going to come all the way down. It's going to be a continuation drop, okay, like this that happened back in January of 2016, or whether it's simply a pattern development and pure profit taking. This was a consolidation, and there could be another consolidation. Now, keep in mind that at this point, let's talk about what's happening at hand, instead of trying to project out all the time, like, how far we can fall. Okay, so what we have here is a significant breakout. I'm not mincing words. This is pretty serious stuff here. The bulls will say, the bears will say, oh, it was on lower volume. Well, it really doesn't matter, because because the fact is that if you look at the breadth of the market, it was almost a 3-to-1 update, and on top of that, pretty much all sectors participated aside from biotech. So from a technical standpoint, if you're just looking at candle symmetry, you're making a new high. Now, I don't know, some of you might know this or not. Some of you, when you take out new highs, you generally tend to go higher. Somebody say, how is that possible? Well, it's possible because a lot of the new money that came in here, okay, a lot of the new money that entered the market here, let me switch this Pen to yellow again. Okay, a lot of the new money that entered the market on this big multi-year breakout here at this 21.95 level or so, they don't have any baggage in front of them. You know, what's resistance? Resistance is basically where you might have bought something and then you got caught and now you're back even. So what's the first thing that goes through your head? Oh, Lord, I'm even. Let me get out of here. You know, thank God I'm even. You know, I got my money back. I put $100 here. Simple example. I got my $100 back. I even got $105 back. So let me get out of Dodge. That's resistance. That's why you have a little bit of volatility on the resistance side. Very simple stuff. But once that clears out and new money enters the market, maybe a bunch of newer, fresh cash that enters the market, this is what happens. You're up 300 points. Now, of course, there was this big algo programs and all that stuff, but short squeezes galore. I'm sure a bunch of big hedge funds. When we got caught on those SPX lottos and stuff on the put side, okay, that's why I always said do the lottos. Don't go out there and buy expensive put premiums, you know, just the lottos. We're not the only one. When the market reversed, and of course this is a weekly chart, when the markets reversed the other day, when it looked like it was going to come down at least to 21.75 or so, but right from 21.80, it was a bang, it turned around and took off. And like I showed repeatedly on my charts, the Russell 2000 took off I said, this is just unseen. It's just unbelievable. But that's what happens. So when that happens, that means some big money complex, big players really got caught in a bear trap. And when they got caught in a bear trap, they're not like humans in the sense that, oh, we're just going to sit there and wait for the market to drop. No. They sell, they take their losses, they turn around, and they make it back up. This one candle alone probably made back a significant amount of hedge fund losses that were caused by the abrupt turn in the market this week. So when you look at this here, there are different ways to project how far we can go. I said 2240, we hit 2240. We'll probably overshoot. We'll probably go to 2250. What's 10 points from here? That's roughly another 60 Dow points. So I'm not going to sit here and give you guys we're going to go to 2250, 2260. Bottom line is I showed a beautiful chart earlier on which showed that we're probably going to go to 2300 on the S&P 500 by the end of the month, which is the end of the year. Now, in between, are we not going to get volatility? We absolutely get volatility. No question about it. We could drop 100 points for no reason. We have a Fed meeting coming up next week. I'm sure the markets are going to, I should never say sure, but the markets should retrace a little bit. And the normal retracement is to standard procedure. Would you test the breakout level, this new breakout level here? Now it's above 2220, right? Or maybe even come down and test the 2190 level, which people would think, oh my Lord, we're going to test 2190. It's the end of the world. It's not, because that's what we're expecting, that we would come back and retest that level, but we didn't on a daily. This is a weekly chart. So we could do that. Of course, if we create, again, I repeat, a outside day, which is basically higher and then everything gives in and we print a lower than the previous weekly close, now that gives you a signal that, you know, they're getting out of Dodge. So just be prepared for anything that comes along the way. But the tone is very bullish. That's why I'm showing these weekly charts before I get into some other ones. Take a look at this here. This is your Russell 2000 small cap. I used to call it the U.S. small cap infantry because everybody hated the Russell 2000. Oh my God, Russell 2000, it's a bunch of small companies. They don't know what they're doing. And I used to put it up there on Stock Tweet years ago, and I used to say the U.S. small cap infantry rises to the challenge, right? You're faced with daunting odds, an enemy that's going to totally, you know, far more well-equipped and whatever. And yet the Russell 2000 fights back. And when the Russell 2000 fights back, it fights back with a vengeance. That's why you have something like this. I did alert people to buy it when we started to see the first formations of a reversal candle. Personally, I wish I'd held all the way up. I didn't. I took staggered profits along the way, getting in, getting out. This consolidation, now in hindsight, obviously everything is 2020. This is a consolidation channel. It could have filled the gap here. It didn't. Why? It didn't because the markets are too strong. There's way too much money flow going into the market to even satisfy what is supposedly a mandatory parameter, which is fill the gap. It didn't even do that. And now we have 3 marching soldiers. That's what this pattern is called, with which, again, same thing. This is where we broke out somewhere around 133.80. This is IWM, obviously. And, we could come back and test that. Same thing. But this looks higher. And one of the quickest way you can kind of figure out where it's going, just draw a wide channel. Let's say like this. And let me show you a small trick that you guys can all utilize, whether it's stocks or indices. Let's say that the markets were logical places, which they're not. Okay, they're very logical places. That's probably why I called my service the Clueless Day Trading Service, because we are truly all clueless. All right. So let's say the channel, let's say it followed this channel. If it followed this channel, going back and forth, we would be up to 1400 or so on the Russell 2000 and 140 on the RUT or higher. But this happened along the way, a little detour. This pattern detour is a consolidation channel and then a massive breakout. So let me ask a quick question, and let me draw this out with one second. I'm just kind of doing freehand here. Take too long to. So here's the channel. It would have, let's say, zigzagged its way up. The question I always like to ask myself is when I see too much bearishness, not right now, but many times, more often than not. Even now, you hear that out there. Our question is, what if the other side happens? What if something positive happens? Well, one of the biggest catalysts that happened was the Trump election and all the talk, and they will implement the massive infrastructure spending and other stuff that's going on, corporate tax repatriation, corporate tax cuts. Yes, it'll balloon our deficit to sky high, but you know what? It'll also increase growth. So as long as your income is growing, that's the GDP, then you're okay to pay back your loans. That's the deficit. That's the reason why the U.S. is not in a hole. And everyone keeps on screaming, oh my God, our deficit's $1 trillion. We're all going to be murdered. In the meantime, interest rates were all-time lows. Historically, they're at even now historically at all-time lows. So your debt service is smaller. It's like your credit card payments. Your income's going higher. You got a nice fat credit card bill, but at the same time, you can service that by paying down a good portion of it, or even a percentage of that every single month, because you got money coming in. It's the same thing with the U.S. economy. As long as the growth factor keeps on rising and rates remain somewhat reasonable, higher than here, but somewhat reasonable, then you can service your debt and you're not going to go bankrupt. How many times do you hear about the fact that the U.S. is going to go bankrupt? And I don't want to even get into it right now, but I'm a student. I mean, my schooling, my college was in international finance and economics. And I'll tell you one thing. Traders should not do two things. One, stop being analysts and try to dissect every income statement. Oh, here's the PE and stuff. They don't even know what the heck they're talking about. Growth companies are measured in PEG, price earnings growth, and many other different variables. And please don't try to be an analyst. Yeah, I mean, definitely exercise your mind a little bit and look at that number, blah, blah, blah. But don't try to be like a dissecting analyst, because even the big shots on Wall Street are wrong 90% of the time. And they got more information and knowledge than you and me put together. I worked there, I know. And number two, please don't try to be an economist or a central banker, and you'll be a much better trader. You sit around, try to dissect every single political motivation and monetary motivation of every single central banker, from Janet Yellen to whoever. Okay, do it over a nice couple of drinks with somebody, and you want to sound very intellectual, but you better know what you're talking about. because what I've found in my years as a trader is unless you're a really deeply passionate student of the financial markets, and even when you are, don't try to put your political dogma and your one-sided belief on whatever to as a trader, because then you're going to screw up. So don't be an analyst. Stop being a central banker, and focus not just on technicals but other stuff that's going around. So here's a what-if question I want to ask people and see who's, somebody just give me an answer. So you're seeing this pattern develop here. What is the question that I'm going to ask? What if what? Can somebody step up and tell me? Why can the markets, why can't the Russell 2000 still continue to go higher? What has to happen? I'm almost given the answer. Anyone?
Consolidation.
What kind of answer is that? What consolidation? This is the consolidation channel. Let me rephrase the question. Listen carefully. What can make the Russell 2000, technically speaking, looking at what you have in front of you, focus on this, okay? What has to happen for this to go higher? And what if that happens? What is
it has to go into that channel.
Thank you. Thank you very much. Who said that?
Vikram.
Thank you, Vic. So Vic, you're absolutely correct. That's the answer I was looking for. I always ask this question. A lot of the times it happened way too many times. I'm just like, oh my Lord. Okay. What if it enters back into this channel that it broke down from, created the consolidation channel, as you correctly pointed out? And what if these marching soldiers, these candles go into the channel? You are back into the channel, so you can possibly get higher numbers, significantly higher from here, and possibly create another high-level consolidation channel and repeat the process. Of course, the other can happen, which is we could break down, try to find the support at 130, try to bounce, create a bear flag, and then break down. In that case, that would be a head and shoulder. You have a head, you have a left shoulder, you have a right shoulder. That's a different story. That's the bearish viewpoint. But otherwise, what if we enter here? Now, of course, there's going to be major resistance at this level because entering a channel is not something that's done easily. It has to be done by something called, and I have a difficult time saying this, a breadth thrust. This is a breadth thrust that you guys are witnessing, okay? Where you get this massive fat candles, huge amounts of money. It's like a booster rocket. I used to explain the old days, and I'll explain again. It's like a booster rocket, which is far, far larger. That stays under the shuttle, right? Or a rocket going up, because that's what boosts it higher. And they fall off as it gets into orbit, because it has to transcend and go above the gravitational force of Earth, right? You guys know that. Just turn on Discovery Channel or go to YouTube and look at a rocket launch. So so the bottom line is the same thing with markets. If the big boost that needs to come happens on days like today and in a whole bunch of days that we have witnessed lately. Now, especially today. Now, booster rockets, when they go up like that, of course, there's a little consolidation here and there, and I can't tell you exactly whether it's going to be a lot or less. We'll see. But we are right now up there, and you should be. It has jettisoned forward. This is the first sign. I'm trying to get to the weekly, but it looks like it's frozen a little bit. Bear with me 1 second, guys. Okay. This thing is a bit frozen, so you gotta bear with me. So I'm gonna move on to, I was gonna show you well, all these charts, by the way, just so you all know, are printed, beautifully laid out for everyone to study and replicate on their own screens on the real-time Twitter feed. So, okay, it's starting to come back weekly. Sorry about the delay. So all right. So at this point, what is going to happen is there's a rush to the gate, obviously to the finish line. That's December 30th. The markets are on a, oh, here's your weekly SPX. So the markets right now, I drew this channel earlier on to show you all, because once it breaks out, how do you measure where it can go? There are two ways to measure it. If you're looking at it longer term, like you want to get a longer term picture of the market. First, you look at the depth. This is like a cup and handle, if you want to look at it that way. It's like a cup, created a minor handle, couldn't wait, and then bang, higher. So what's the depth of that cup? It's roughly 2,200, and and here it's 2084, right? So it's 120 points or so, correct? 120 points. All right. So 120 points plus where it broke out of. So you got 2,200 plus 120. When I have the exact number, 2,300. And that's what I showed earlier on, is where you probably will land up by the end of this year. 2,300. So 2,300 is only 60 points away from here. So that's about 300 to 400 points on the Dow Jones, which will bring us close to, don't be surprised, could be a Trump surprise, that they print 20,000 by the end of this year, which is a few weeks away. It's very possible. We have 15 trading days left, and we have to go up about 120 S&P points. So on average, we have to go up 8. Wow, the number 8, right? 8 S&P points on average a day. So someday you might be down 8. The next day they could run it up again 15. Whichever the case, on average, you have to gain 8 S&P points for the remainder of the year in order to get to 2,300. It also matches with the channel, because the upper end of the channel coincides with 2,300. Okay, so traders can ask, so how do I capitalize on this? Well, one way you can capitalize on it is to basically, one way you can capitalize on it is to buy a long-dated call. End of December, not the last day necessarily, because there's a lot of jostling that goes around. So you can buy that and not look at it, because in between there's going to be volatility. Or you can buy a little and then add to it. You have the time premium left for the last week in December. And unless something really dramatic happens, we are obviously monitoring this for you on a single hour by hour, minute by minute basis. That's why you're at Clueless Trading Service, right? It's a fact. Because one plug I'm going to give on my service, marketing plug, that some of you might, not realize, or realize but forget, that this is truly the most real-time online trading service that you guys have ever been in. And it's real-time learning too, because of my constant engagement with with all of you in the chat room, and the fact that real-time charts are being posted so you can see what's going on. So saying all that, and so do pass that word around, because we certainly need to grow our membership base. We lost a few people over the last couple of months because the markets were nuts, tactically nuts, but still nuts. People get phased out, and then they look back at it. You know what they're thinking? The few who basically couldn't handle the pressure, and I don't blame them. They're saying, "Oh shit." I'm sorry, I can say this, my own private webinar, right? They're saying, "Oh shit, I can't believe this happened, and I sold everything right before the elections, or I didn't buy after when it was fully." I said aggressive 3-candle move, small minor consolidation, and then another 3-candle move is starting, and the pain of regret is just way too much. It's too much. And you know what they're going to do? They're not going to come in at the top. They just won't come in, and they wish that they remain in the game, even though it's tough. I know that. So saying all that, let me show you a quick trick how many weeks this can go on. This was Brexit. I'm sorry, this was Brexit. This was January, February. We had 1, 2, 3, not including the reversal candle, 4, 5, 6, 7, 8, 9, 10. We had 10 weeks of a rally in between 2 weeks of minor consolidation. Now this is weekly, mind you. I'm sorry, this is the daily. My apologies. So here, now this was Brexit. Count this green candle. 1, 2, 3, 4, 5, 6, 7, 8. There were 8 weeks that the market went higher. Count this. 1, 2, 3. I'm even counting the consolidation day. I mean, consolidation channel. 1, 2, 3, 4, 5, 6, 7, 8. Brings us to the end of the month. That's exactly what's going to happen. Unless we completely fall out of this acceleration channel, that's a different story. Okay, so that's your bigger picture. Now, regarding individual stocks per se, there's a lot of opportunities. Don't necessarily always have to trade Amazon and Google and Priceline, which, you know, because unless you get into way earlier on Priceline, you're going to get a second mortgage to buy those calls, right? Because the premiums are all stuffed because they know it's going higher. When Priceline was in the 1460s, whatever the case may be, you can look up my charts. You had calls were cheap. They were $3-4, and they're 17 now. These were the 1530s. The 1540s are 4. And wow, without the chart, this is what it looks like. Okay, those are the algos. So there's a bunch of opportunities left. So I'm just going to roll off a few. I'm going to roll off a few. Actually, before I do that, let me show you the other stuff that's going on, which is really, really critical because it's a much, much bigger market. Okay, if you look at the, I'm sorry, DX. If you look at what's happening with the US dollar, I showed this clearly. This is a weekly. This is a weekly chart of the US dollar. When the US dollar starts to weaken, it basically it's brings in, it's called a carry trade too, similar to the Japanese yen, you know, strengthening versus the US dollar. You got or weakening US dollar. Now the US dollar is now starting to weaken. This is a huge boon and a catalyst for the commodity complex, for US multinationals. Just in simple, without getting into the heavy duty economics of it, a weaker dollar is good for now because the way it was rising, and if you shot up to, let's say, 103, 104, the markets wouldn't like it at all. That puts a lot of pressure on future earnings and future cash flow of U.S. corp multinationals, which are the bread and butter of the U.S. economy. Okay, so this when you look at, all you got to do is simply look at just look at the pattern. It still has to come down a little bit lower, but remember, every point drop on the US dollar means a huge boost for the markets. It also moved quite a bit away from the moving averages. The standard deviation here was very large, so it's doing some mean reversion. It doesn't mean it's going to crash and burn. You don't want the US dollar to crash and burn. You simply want it to come down to a level where it's reasonable for the valuations in the market. So that's number one. So that's a plus, that it's coming down, and I put that down in big bold letters, kindergarten style, so people can understand it without really understanding economics, which is fine. The other thing that's going on is the sharp rise in the 10-year government bond yield is being somewhat tempered a little bit. It reached a, I'm just going to get the pen here. It reached a critical resistance here around the 2.5% level, and now it's consolidating a bit. In my opinion, if this is a inverted head and shoulder, then it's going to create another shoulder, probably come down to about 2.2% or so. And again, I'm not trying to make anyone a bond trader or a bond guru. So bottom line is that at this point, it looks like it wants to basically, you know, create a left, this is the left shoulder, a right shoulder somewhere around here before it busts a move. Because the faster it moves towards the 3% level, believe me when I tell you, the markets first will like it, then they'll start getting really, really scared. And the markets will never tell you when they like it or not like it, that's predictive analytics, and I'll try to put in as much as possible so you guys are aware of it. Because above, let's say for example we blow through 3%, trust me, you're going to get another rate tantrum or rate exit like we got back in January and February, when there was a fear that rates would rise very quickly, very fast. So this pattern will be completed, but at the same time, you don't want it to rise too fast. So those are the two other factors that's that holding. Oh, the other thing to keep in mind is that at around 2.5% and somewhere between 2.5% and 3%, fixed income yields, in this case 10-year bond yields, become competitive with what? Can somebody tell me? Between 2.5% and 3%, fixed income yields, which is the same thing as interest rates, fixed income, let's say 2.6%, becomes competitive with what?
Savings.
Nope. Becomes competitive with what other asset class? Stocks. I've explained this many times before, so this time remember it. Remember, there's a finite amount of money out there, and it's a game of supply and demand. So the fact is that if bond yields keep on rising, and this is the safest asset in the world, then it becomes competitive with S&P yields, which are currently around the same level. I've explained this before. It's a very, very important concept, and you guys all have to remember it. You don't need to be a rocket scientist or go refresh your, economics classes and stuff like that. Well, they never really taught you that in economics either. But the SPX yield is somewhere in this range, between 2.5% and 2.7%. So if bond yields surpass S&P yields, the big money says, you know what? I'll stay in one of the safest assets, and this is that big sort of heavy money, says I'm going to basically, here risk is zero, right? The risk for default of US government bonds is zero. Has been the case, will be the case, regardless of whatever is mentioned out there. So here's risk zero, and stocks are risky. Okay? Stocks are risky. So basically, wouldn't you make 2.6%, 2.7%, like you kind of answered it incorrectly, but in the right frame, in a sort of safe savings type of thing, instead of sitting on a dividend yielding stock giving you 2.7%, where your stock price can basically just go like this because of many different factors. So bottom line is that any place above 2.5% going towards 3%, there is a fight for money to go back into the bond market and sit there instead of invest in stocks. So you don't want that type of competition. Very, very important concept. Very important concept. So, but if I notice that the 10-year, for example, was down 2% today, not in interest rate, as in price. Okay, that little red thing that you're looking at was today's action. There, mine. Okay, it's overbought. It's today's action. It's moved quite a bit away from the moving averages, but these are curling up. That means rates are going higher. You don't need PIMCO to tell you that. I'll tell you that. Eventually, rates are going higher. So in the meantime, there's a little consolidation. Okay. Now, there's a lot of stocks out there, guys. I put out a great bunch of charts, whether it be Twitter, whether it be MELI, whether it be Lululemon. Did anyone buy even a little bit of Lulu? No one? No one. Okay, great.
I had some. I was on mute because.
Okay, no problem. Do you still have it?
No, I just bought some calls. I'll sell them tomorrow morning.
Yeah, that's fine. Your calls will be up 400%. Lulu is up $11 right now, and you know it's a heavily shorted stock. This stock is going a lot higher, and I've shown on my charts where it can go. So I'm not going to repeat that because I've already shown that clearly. And as you know, that Lulu was something I was talking about for weeks now, because it was basing fantastically. It was stuck there, but no one gets excited with a $2 move, right? In the meantime, the calls can be up 40, 50%. I've shown repeatedly. It was stuck within this box, and I kept on showing macro falling wedge on Lulu and stuck between 54 and 58, $4. So no one's excited. Well, they missed out. It's up frigging $11 right now, and it's trading at $68. It's going to hit 70 at the open. It's above the 150-day moving average, this white line here, and the stock, and there's a big fat gap here. Big fat gap here, and the stock is going to go to $75. Somebody said, oh, by tomorrow? Yeah, sure. You know, of course not. But who knows? I don't know what the short position in Lulu is. Somebody find out. If it's huge, it can go. But this pattern, which I've been showing, this basing pattern for weeks now, is now going to get completed. And the stock is right now at $68, and the shorts are completely, they're at Costco buying adult diapers. Because this is a dangerous situation. These hedge funds who are short Lulu, and I don't give a hoot about, you know, Lululemon pants and stuff. I'm talking about the technicals. I kept on seeing it, and one person only bought a little bit. Could buy a little bit. All right? So just a good suggestion. These are like powerful, even if it went down, if you bought these calls, they were like $2, $3, if not less. I think some were less because of lottos. You'd be sitting with 400% on your return, just the way it happened with Workday, and on the short side, it happened with Alta on the long side, and God knows quite a lot. And of course, we get our misses. That's why you do a small amount. So congratulations. And who was that, Vic?
Because
Yes. So it's a good point that you brought out regarding the reason I'm talking about Lulu is this. Okay, guys, if we're always constantly looking at the same old stuff, Amazon, why isn't it going up about 762? Oh my God, it's at 765. I mean, seriously, I'm not mocking anything. Oh my God, if it holds about 765, it's going to be like whoopee time. And we're always looking at the same old big stocks, paying big premiums on these things, and they don't move. So there's premium, I call it premium suckage, basically the premium sucks out. And like, oh my God, this and that. Look out a little bit more. Broaden your horizon. So when I put stuff out there, which are not the regular trading stocks per se, the big cap trading stocks, take some position in them. Melly, the calls are pretty damn cheap. And Melly is a serious company. Some of you might know it, some of you might not. It's the Google of Latin America. And I didn't even know this because I've been showing Melly for the last couple of days. Today was upgraded to $200. And this, and again, I'm going to show quickly, but I showed the charts on this stock and drew out all the lines and everything, this one earlier on. And this is not a joke. It is going to go to $175. Happened way too many times where I've shown it and it's taken off. I showed it down here this November I didn't, and then earlier on here I remember back in July or something, and it just went straight up. This is a straight up kind of stock. So if you want to branch out a little bit and stop being fixated and obsessively fixated with the same old stuff, which I put out there too. So I'm not saying that you shouldn't, but take your eyes away and look elsewhere too. Look at Twitter. I didn't hear a single person in here say, wow, look at Twitter. Twitter's on a massive monster breakout. This, which reminds me of the Dow Jones, this thing is frozen, like the huge candle. Look at that. You really want to mess around with that candle? Good luck. Yeah, it might just stall here because it is a resistance line. That's why I have it here. But it might very well, given what's happening, the backdrop in the market, the changing feeling of optimism, finally. And for reasons I explained before, the asset allocators, the mom and pops who are actually like, I'll actually open my monthly statements for my mutual funds. Believe me, that's going to happen a lot now, saying, oh, I'm not scared to look at my monthly statements anymore. Yet the market's been up a gazillion points from 2009. They are still completely apathetic about the stock market. Finally, the last stage of this big move in a bull market is starting. This is wave 5. And wave 5 is where euphoria creeps in. But it takes time. Just the way there was apathy for the last 8 years, 7 years, since 2009, with bouts of mini euphoria, the big relief sigh of this wave 5 is starting right now. It doesn't end in 1 week or 2 weeks. It takes a whole bunch of months. So saying all that, here's another stock, just laying it up. Did anyone buy a couple of those cheap calls going out December or January? Did anyone, no? Great. That's great news. That's great news for me, because when you all, because the Clueless community is like a microcosm of what's out there in investing world, right? You guys are much smarter. You guys get helped a lot with tactical tools, big time. Many of you have started to think outside the box as much as you can, and I commend you for that. But the fact that not a single person stepped in and bought Twitter today on my repeated alerts is great news. And do you know why it's great news? Can somebody step up and tell me? Let's see how the brain, I want you guys to start thinking different. Why is it great news?
Because no one is buying at this time, so you want to be the buyer at this time in the market.
Yeah, you kind of answered it in a long-winded professor, but the bottom line is that even with terrific traders like many of you, all of you, I'd say, okay, some of you more so than others, there is very little interest, and the stock's going higher. Because the more you guys crowd in, and if I heard everyone say, yes, I bought Twitter, yeah, that'd be pretty exciting. But then that means that maybe a lot of people out there are following the same example. Twitter's flying under the radar right now. But honestly, even at this rate, even if it goes and retests the upper end of this channel at 2008, and it goes to 21, which I think where it's going, 21. Not saying 26, 21. You're gonna get a triple on those lottos. Because Twitter, it's a little, the premiums on the Twitter calls are a little bit higher than the Bank of America, but there's double-digit stocks below 20 still. Well, Bank of America isn't anymore. So I'm just giving you two small examples that you have to think outside the box. And I'm too. And I'll be focusing more on that because I realize one thing. These high-powered momentum stocks, right? They get so nutty, and during these major asset allocation moves or heavy-duty, some sort of external global crisis and stuff, for no reason. They're being used as an ATM machine. Well, for a reason. Somebody's got to come up with the money. They're being used as sources of funds. That's why you call them ATM machines. And they get untradeable at times. And then when they move like you're seeing. Here's the great news. There's still room left. Without looking at it, can somebody tell? Amazon was up about $6 today, right? A little less than that. It hit exactly one of my levels on there's your Amazon chart. I mean, you can't get any better than this. I mean, I think our kids could trade better than us questioning every move on this. I mean, this is a Lego like fifth grader version, like I put out there on StockTwits. That's my favorite term, when I put these charts out there. This is a fifth grader version. It wants to go kiss this gap fill here, right there, and that's around 780. Now, whether it does a little twisty turny doesn't matter. It really doesn't matter. And the fact is that even if it does this, oops, sorry, let me just put this out. Even if it does this, comes down the, $4 or $5, as long as it doesn't enter back into this channel and falls below this channel, that's when you know it's a shortable stock all the way back to the 740 and 730 level. Only if it falls completely out of the channel. There are many supports along the way. There's a major support here with the stock at this today, for example. had this massive reversal candle. But in the meantime, this is where it wants to go. And it's very possible it wants to go to the upper end of the channel, which coincidentally and mathematically coincides with the upper Bollinger, which is 790. Remember, these are mathematical probabilities, not certainties. Nothing is certain. But this pattern, in my opinion, for a strong stock like this, should get filled, completed. And that's the end of the story. Now, how it does that, just got to manage your trades. Can be just, that's why I say keep on looking at the charts and replicate some of your charts. In fact, most of your charts to mimic at least one of my platforms. Investing.com is free. Just use it. It's a beautiful platform. You can see movements, reversal candles, blah, 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 everything. It's fantastic. And it's free. Then you got a huge gap fill here, which I showed, which measures up to 814, 800. Is that possible? Absolutely. Is it also possible on the bearish side that it falls back into the channel and then bounces from here again? Absolutely. That pattern is known as a dragon bullish. We study all this on the beginning of parts of the advanced coaching session. But these take time. They happen over days, not over minutes and hours that we're looking at these things. Is it going to do that? I have no idea. I think personally that it wants to hit this gap first and then decide which way it wants to go, whether it wants to just blast through. My gut tells me, I showed a picture, I showed a very precise chart on the NASDAQ 100 power shares. This is a massive ascending triangle. Given the juice that's going into the market, given the fact it's year end, given the fact that lots of money managers and hedge funds and mutual funds are still, believe it or not, underperforming the broader market in absolute terms, that they want to basically take this ascending triangle and break it higher. In order for that to happen, they need the participation of Apple, Amazon, Tesla, Google, Priceline, and all these big behemoths which are in the NASDAQ 100. So sometimes there's no reason why they're going higher aside from the fact that they're buying these baskets. They're buying the NDX futures, which hold the baskets of these stocks. That's why they're rising. So you don't have to find a reason like why they're going higher. And I think this is going to happen. It's pretty obvious. Now, this is a daily chart, so there'll be some, but this candle has to be respected. And at least it'll test the highs. At least it'll test the highs. And that's true of the NASDAQ 100 too. Look at that. The NASDAQ 100 will test the highs, in my opinion. Look at this candle. They want to get there in a hurry. There's no waiting around. That's why you have to act aggressively too. First it was small candles. Okay, maybe we're going higher, maybe we're not, and then bang. And there you go. And it's going to be here before you know it. 4,900. Now the third time something gets up there, generally speaking, just like the S&P 500, it overshoots. It overshoots. Okay? And then it falls in. But every single time, it's physics, I mean, typical, physical aspects of materials. Every single time you thump on something, it gets weaker and weaker. That's why you break out. It's the same thing with breakdowns. If you keep on hitting support all the time, at one point the support's going to give in because it gets weaker. So it's the same thing with this thing. If you treat this as a very wide trading range, it has hit support multiple times and close to it. Now it's heading up here. Maybe it's just going to stop, dead stop, right there at 49.11. I doubt it. I think given the backdrop in the market, it's probably going to go overshoot and head towards 49.50. And you see it happen. And one of the reasons is that you get this huge move which we had here, by the way, too, but then there was a reversal candle. And this was right before the elections when everything got sold. And this is right after the elections when everything got bought. Okay? So I'm going to just open it up for a question or two, because the reality is what's going on is we have to, I'm going to repeat this, I can't even tell you how important this is, that things are changing. You have to adapt. You don't need to own all the positions, but you got to own positions which are coming off lows. This Allergan AGN that I don't have on this side is a perfect example. And the stock, it's a defined double bottom here. What do you think? Trump's going to kill the drug industry? Absolutely not. His nominee is one of the most pro-pharmaceutical guys out there. Anyone remember his name? The Health and Human Services, whatever. Price, I think the guy's name is. And then yesterday in the Senate, they blocked any major government regulation on drug prices. Did you guys know that? Bernie Sanders brought it up, said that Trump promised the world that he would basically control drug prices. Even Trump said, okay, drug prices will stop going up. But the Republicans blocked that measure. The Republicans blocked the measure last night and in the Senate. Then they're not going to go out there and destroy the biotech and the pharmaceutical industry, because that's a staple of American capitalism. Yes, drug prices should be controlled, but let market forces control it. You can't have government putting their nose into everything. In that case, we're just like communist Russia back, China back in the days. They're actually far more capitalist than we are. So saying all that, this stock will break out, in my opinion. Maybe it, jostles around here a little bit, but this is a pretty defined chart. And in my opinion, will get up here. And it's not going to take that long. And it won't require a tweet from Trump either. He'll probably invite the head of Allergan, Saunders, to come over and chat with him. Next thing you know, boom, stock goes up $5. What's he going to call him and spank him? All right. So again, ground floor opportunities to do these things. In the meantime, big word of warning for all SPX and RET traders. If you're not really watching the charts, or you have access to charts, let's say on a hourly basis or so, don't trade the SPX intraday. Please don't do that. Okay. And the same thing with the RUTs, because these are just animals, right? You buy a couple of contracts, next thing you know, you're down $1,000 for no reason, because it's just the way it is. And this is like futures trading. So if you look at it, I'm sorry, let me look at the 5-minute. So if you look at the volatility, right? If you look at the volatility till Sunday, let's look to see what happened between Sunday and Wednesday. It looks like the world's changed. There was so much chop in between that unless you're really, I'll put out the entries of inflection levels. After that, you're going to manage. If you have 4 contracts and you're up $1,000, you got to do what you need to do. You can't be waiting around for me to tell you sell. First of all, I don't have that type of manpower. And secondly, you guys don't pay me enough to do that. I mean, that's a fact. Straightforward Trump talk. Pay me $1,000, I'll cater to every 5 minutes to what you guys are doing. But it's not like that. I don't even go there, because I cannot micromanage other people's account. So when you're doing this stuff, right? Let's take a slice of this. Look at the chop. That's heavy duty chop. It's a $6. Let's say you bought a $3 call here because it looks like it's going to break out. It's going to be down to $1.50 or 70 cents down here, and then it moves up nicely. Then maybe you pick in some more, and then look, jumps up, all within a day's work. So unless you're tracking the charts, unless you spend a little bit of time and a little bit of money in taking up with the advanced coaching sessions where I really get into the nitty-gritty of it, I talk about trade management and many such things, just don't do it. This huge 6-candle move that was 2 days ago, 1, 2, 3, 4, 5, 6. can't be catching this stuff by coming in and say, oh, where's the S&P, you know, an hour later. See, first you got to know what you're reading. I put some very tactical advanced charts that I spend a lot of money in to pay for the platform, which all of you can get for a very discounted rate, not from me, from the company itself, Quad, Quodd, which has been absolutely fantastic. I've been using it for more than 10 years. And I've been actively trading for maybe 8. Okay? Even though I've been in the market since 1996, 1997. So the point is that Quad really gives you that algo pump and dump, which you see. And you can identify things here. Right now we had a red candle. I'm looking at the after hours SPY. There's a fat bull flag being formed as we speak here at 5:46 p.m. So whoever basically, oh, the market's going to crash tomorrow morning, is just going to get smashed. So those things you can identify very, very well in the HFT charts that you guys all know which ones I'm talking about. I'm talking about, bear with me one second. I don't want to delve on it too much, but for newer people who are listening to this, this. Okay? So this red candle right now is it's a bullish engulfing green right now as I turn around and look at my other monitor. So these algo, like for example, we're selling off this morning. You see this here? Of course, when you have your own platform, you'll see it in a much clearer manner. So here we were selling off. So it looked like we were going to come down, test these levels, and I showed even the levels. But the minute it touched the pivot, slipped down, and turned, you knew something was going on. Now, when you're doing this, you don't need to wait for my alert. To be honest with you, say I'm going to buy. And even a small spec of SPX call bought here, you can imagine where they went. And then it just took off. Every candle development, one after another, you know something big is going on. And secondly, when it broke out of the channel, this very wide channel, you knew something big was going on. So this, the algo pump and dump as the money comes in within and goes out. When it goes out, it's that red candle. And you can actually see them shrink in size. You know, if this is a red candle, as it's turning green, you can actually see the shrinkage in the move on these, and you identify it almost instantaneously. It's not easy, especially on very volatile days. It's not that quick to read because it'll go up and then it'll come down. But of course, on days like today and some other days, it's very, very defined. Today being sort of out of the ordinary. So that's it. So any quick questions? And the only thing I want to remind people, you gotta, and I know I sound like a old fart, excuse my French, you gotta look at my charts. You cannot just walk in and say, hey, what's going on? Because the hammer's going to hit you on the head. You won't even know what's going on. You gotta quickly look at the charts, the pre-market ones, get ready. If you have some time, and then as you get into a trade, you look at the chart, the parameters I'm putting on. And if it gets there or close to it or whatever, and you're up nicely on it, whether long or short, you do what you need to do. Don't expect for me to give you a sell signal, even though I do, you know, when things were going nuts, I said, okay, 60, 70% of the trading positions are out. That doesn't mean everything's out. You got to manage your positions. And then as things turn around and go up again, you can re-enter. Any quick questions before I leave you fine gentlemen, ladies and gentlemen? Dano?
You're good. Thank you.
No, I'm good.
You good there, Dano boy?
Yeah, Frank, I'm good.
Okay, that's cool.
We'll see you tomorrow. Have a great day.
You too. Okay, guys, have a great evening. I'm going to put this up on the YouTube channel. Just want to give you a rough idea and think there's a lot of stuff going on, and don't expect straight line up, but then at the same time, don't expect a major crash yet. I think it's coming in January, and I've said that before. So have a great evening. Thank you for the participation, and please provide some great referrals. Look forward to seeing you guys tomorrow. Thank you for attending.